Hi guys, welcome to Elliott Wave tutorial part 2 where we will be discussing corrections. If you would like to know more, check out the 48 module masterclass designed for anyone to accurately analyze, trade and invest in the stock market. So let's move on to corrections. So following on from number 1, we have an impulse which is designed to be a 5-wave correction. Following this 5-wave leg, we get some degree of correction. There are 3 typical corrections that we deal with, which are flats, zigzags and triangles. In the next module we will be going over more complex corrections. After this degree of correction is over, we then continue the 5-wave impulse. As we have mentioned, this is occurring on every asset class on all time frames simultaneously. So let's go into the first correction. This is known as a flat pattern, almost a rectangular pattern, and it has essentially 3 variations. We call it a 3-3-5 pattern because the A leg is split up into 3 waves, the B leg is also 3 waves, and the C leg is 5 waves. Notice, not to get confused here, an impulse is also 5 waves. So often it is the case this C leg can convince people that we are actually in a new impulsive trend going down. However, if one has counted it correctly, you would understand that this is actually the end of the pattern rather than the start of a major impulse down. It's actually a continuation pattern going up. This is basically a bullish flat pattern. Prior to this, there would be a trend going into it and there would be a trend going out of it. Now, what are the 3 variations? Well, what you have right in front of you is known as a regular flat pattern. Why is it regular? Because B stops around the point of the start of the pattern, point 0, and C stops around the start of point A. That's known as a regular flat. We also have an expanded flat where B pushes above the start of 0, presumably running off stops, capturing that liquidity for the smart money, and C drops below the start of A. This takes more of a stretched out nature, known as an expanded flat. A more bullish variation of this is called an irregular or a running flat, where the B continues to move above the start of 0, but C, the market is so bullish it never makes it to the start of A. It's that bullish. So, forget about C running the liquidity stops below the start of A or it being any form of irregularity there. It's so bullish, the market, they actually stop this market and continue the uptrend, presumably because it's so bullish and people want to jump onto this trend and they don't want it to drop any sooner. This pattern right here I see all over crypto all of the time. I first encountered this pattern around 4 to 5 years ago and I notice it all the time. There's a lot of herd retail sheep mentality when it comes to crypto. A lot of people want to FOMO into trends and the markets tend to have very, very bullish patterns when they are bullish. Crypto, when it's bearish, is absolutely awful. The patterns are very, very complex and they're often just moving sideways and down. However, in a bull market, in crypto, you will very much see this where everyone piles on and they never let this C wave get anywhere near even the start of point A, let alone any kind of expanded variety. A breaks down in 3, B breaks down in 3, C wave breaks down in 5. Whether it's running or irregular, whether it's a regular flat or whether it's an expanded flat, it would always be 3-3-5. That's your first most common correction. Let's go back to the impulse. Where do we see these flat patterns? Is it often in wave 2 or in wave 4? Usually speaking, in an idealized textbook 5-wave impulse, notice 1, 3 and 5 themselves are impulsive, 2 and 4 are corrective. It's usually wave 4 where you would see flats and where you would see triangles. It's often the case wave 2 tends to be either a zigzag or a flat. If I had to work off probability, I would say most wave 2s are zigzags. Just bear that in mind. Most wave 4s I would say it's probably a 50-50 split between flats and triangles. But as Jesse Livermore, the great trader of the last 100 years, he was around, around the Great Depression in 1929. Every market has its own personality. Just to highlight whilst we're on this, wave 2 can never be a triangle. That is actually a rule within Elliott Wave. So if you're looking at a presumed wave 2 and you can count a perfect triangle, which we'll cover in a short while, you're not looking at a wave 2. You're probably looking at a B wave or an X wave of a much, much more complicated pattern. Wave 2 is not allowed to be a triangle. Going back to Jesse Livermore, every market has its own personality. Crypto, commodities have blow-off tops, ABC running flats because it's so bullish. The S&P 500, which is the major US benchmark, formed a wave 2 larger degree correction back in 2011. It was also, by the way, a form of a running flat. So the wave 2 correction in the S&P was not a zigzag at all. It was actually a flat pattern. Further on down the line, about a couple of years ago, from 2016 to 2018, that was also an expanded flat, and that was a wave 4. So wave 2 was a running flat in the S&P 500, and wave 4 was an expanded flat. So understand, every market has its own personality, and you have to encounter different kind of patterns. But because it's fractal in nature, these patterns are often repeated. It's not often you will see a triangle sequence in the S&P 500. Usually you're either looking at a zigzag or some form of variation of flat. Anyway, let's move on to the second form of correction. And what is that? That is a zigzag. And a zigzag we call 5-3-5. That is because the A leg is 5 waves, the B leg is 5 waves, and the C leg is 5 waves. In later videos, we will be going over the Fibonacci and how these waves are correlated to each other and how to project targets. That will be a later video. This is all about getting used to the idea of corrections. 5-3-5. Just to give you a quick primer there, wave B, it is often the case will retrace 50% of the distance between 0 and A, and C can often be equality with wave A. Very much looks like a zigzag. Like I said, you commonly find this in the wave 2. And the final correction is 5 waves technically, but this is broken down into 3 legs the whole way down. 3, 3, 3, 3, 3. Okay? So whilst it might be 5 waves in terms of the number of corrections, each wave is very clearly corrective. This can, of course, take various forms. What I am drawing for you right now is a symmetrical triangle where both these two lines are converging to each other. Okay, this can clearly be also more of a ascending triangle, where it's something like this. Okay, that's more of an ascending triangle. That's usually bullish, and then you can get more of a descending triangle where it's kind of like this. So there are variations in the triangle sequence too. I find when you're dealing with a triangle, use the trend line. Whenever you're stuck in the stock market, you always draw trend lines. I always use them. They're almost like polarized sunglasses. They allow you to see a lot more clearly when it's a bright sunny day. Whenever there's a lot of price action up and down, make sure you draw lines. The lines will make the pattern very, very obvious. This is almost a descending symmetrical triangle. Usually these are bearish and they break down. See, you take away the lines, it's a bit more hard to decipher. So a triangle you cannot find in a wave 2 of any degree. You usually find this in a wave 4 correction. Like I said, understand the market you are trading. Cryptocurrency doesn't usually form triangles. I suppose it does in a very much a bear market, but in a bull market, I don't see them. In a bear market, I do. So I take that back. The S&P 500 very rarely forms triangle sequences. I'm never looking for a triangle. If I'm counting something that I think is a triangle, I know I'm usually wrong. It's probably part of a more complex sequence. S&P likes to form zigzags and flats. Understand the market which you are trading. The most common correction that I find is some degree of flat correction because it makes sense from capturing the liquidity both top and bottom. So that is the end of this module here, a nice and simple module to disclose and to discuss the three most important corrections. Flat correction, which can be regular, irregular or running, they're the same thing, or an expanded flat. A zigzag pattern which breaks down in 535, and finally the 5 times 3s, we're looking at a 3-wave correction followed by 3-wave, then another 3-wave, 3-wave, 3-wave. 5 bits to any sort of triangle, can be symmetrical, can be ascending, which is bullish, and can be descending, which is bearish. I'll see you guys on the next module.